Hey everyone, welcome. It is 1 p.m. We just got the closing bell for July 15th, and we had an interesting day. You can see that we're mostly flat on the S&P, mostly traded sideways, up just a tiny bit, 0.27%. That's basically random, and as you can see, that's basically just sideways movement. The shape of that movement did actually take a opposite direction of what I was thinking. We did get the same range and same pattern that I was thinking. It's just that we mostly went up first and then came down rather than coming down and then moving up. You can see that we did get range bound by these two purple lines at the beginning. Then we broke through, we hit that high, and then we pulled all the way back down and eventually to that lower purple line before recovering a tiny bit just before the market close. The fact is, though, that we are below that VWAP and we spent the majority of the day below that VWAP. So we are not that bullish. We are sideways at best with maybe a slight downward bias. You can see that things like Bitcoin really caught a bid today, and actually so did energy. Energy popped up. It broke through that line that we were talking about this morning, and so energy is starting to look very good. So this is a reflection that the market believes that Trump is a stronger candidate, not because of the assassination attempt. Don't listen to anyone that says that. It's because of the performance at the debates. There was already moving in that direction where it seemed clear that confidence in Biden's ability to serve out the entire term, the next term around, was shaken. So this is just an extension of that. Don't listen to any assassination attempt wild theories. Okay, this energy market is reacting to that. Energy is now looking very, very good, and I'll probably start looking for opportunities in or pay attention to potential opportunities in the energy markets. So with that, with today's movement, SPY just kind of flat sideways RSP, what happened? Flat sideways. So that's matching up. That is looking like this market is, hey, we did go up very, very quickly, and now we're pausing, and we'll see if that means chopping sideways or pulling back a little bit. This market does need a pullback. It is just overextended. It doesn't mean just because it needs it doesn't mean we're going to get it anytime soon. Just because you need to go to see a doctor doesn't necessarily mean you go see a doctor. Sometimes people just drag their feet or go to the dentist or get a haircut or whatever it is. Just because we need something doesn't mean that we do it immediately. Eventually, we will be forced to do it, but sometimes we drag our feet along the way. TQEV or EW drifting a little bit higher, but mostly sideways, up 0.16%. But at least you can see that bar pattern is a little bit healthier than what we saw over there in the RSP. And this is looking like a pretty good bounce off of the EMA 8 so far. But like I said, there is signs of weakness. And what is very interesting, at least it was earlier when I looked at it, the S&P up just barely 0.27%, but it is up. And let's take a look at our VIX. Our VIX is up as well, all the way to 13.14%. So that is divergence. Well, actually, it's moving in the same direction, but that's not the normal pattern. It's a divergence from the normal pattern. So we have to wonder what is happening here? Where's that uncertainty coming from? And let's take a quick look at the volume. Yeah, the volume is at 29.13 per million. And if we go on for another, the dark pool stuff comes in, we're going to be low. We're going to be under average once again. So this move higher is just not inspiring a lot of confidence. One thing that I will look at, well, let's look at TLT first. TLT, it did start to pull back. It did gap down. It did recover a little bit from that gap down, but where it closed lower, significantly lower than where it was on Friday. So we will expect this to at least reach this purple line. And if it can break through that, then the MA 200 and 250 or 250 are the same level. And if we break below that, then we can reach that top of this channel. If we can reach the top of this channel, I personally would take profits on the positions that we've been holding and then see if there's another opportunity to go short, but we will see. And just have to see how quickly this develops because if it takes a really long time, it may just be a better idea just to try to look for break even rather than a profit on this one, just because time erosion does still happen even though we chose a longer expiration out into August. So just in terms of efficiency, in terms of monetary efficiency or capital efficiency, it might be a better idea to just deploy that capital into a different investment, even though we're very high conviction on this one. So let's take a quick look at some of where the money moved to in terms of sectors. And then we can take a look at a little bit of momentum, or maybe I'll do it the other way around. Let's take a look at some 90-day highs and lows. We'll start with the lows, 17 making new lows, and on Friday we had 7. So we have a very, very small number of stocks making lows. And then let's look at our highs, 358. And yesterday it looked like, before I hit that button, it looked like it said 359, 365. 365, 358, that is sideways movement, both on the highs and the lows, but we're seeing that extreme disparity. We're getting close to that 400 level where we say, hey, once we hit 400, we're pretty much guaranteed over the next 2 days that we're going to pull back. So all this has to do is go a little bit higher, and then we'll have a very strong conviction that we'll pull back, and at the very least have a mean reversion in the S&P 500 and probably the QQQ as well. So I wouldn't get too excited. Are we rocketing to new all-time highs? Maybe, but I wouldn't say rocketing to it. We might just match or touch and then come back down. We don't even necessarily have to match or touch the all-time highs, but I'm just saying there's potential for it. And then at least right now, based on the signs in the market, it's weak. And it's, yes, we are getting broader based, which is a great sign in the medium to long term, but in the more immediate, it's just weak at the moment. I wouldn't expect soaring all-time highs again. Just maybe touch, maybe go a little bit above before we get that pullback. Maybe once again to the EMA 8, but hopefully at the very least to that EMA 20, but more healthy for the markets would be the MA 50. So let's look at our sectors and see where money moved around. And I wouldn't be surprised to see energy near the top there. We have SMH. Oh, that's negative. Okay. So Russell still got a lot of attention. Let's take a look at that. Yeah, still parabolic, still gapping higher, still moving higher, still unsustainably moving higher. What we want to see is now a pullback to this line. And then we'll see if that holds. If it holds and bounces, then we'll be a lot more optimistic about the small caps. If it doesn't hold and comes back in, then we're just in the same boat. This is just a fake out or a short covering. So this is a wait and see. And then we got energy. There we go, right at the top, other than IWM. So I was right about that movement in energies was very significant and is now signaling that we want to, any shorts that we had in energy, we want to close them out. This again is probably a reaction to the viewpoint that Trump is more likely to win, or at least he's the stronger candidate at the moment. And so Trump pro energy, pro US energy, US gas, US oil. He's no he consistently says that he wants to bring the US into energy independence and start utilizing our our own energy capabilities. So that is very good for traditional energy and not so great for alternative energy. So one of the stocks that I noticed today was First Solar. You can see that First Solar gap down and is matching these lows right here. If it breaks below the low of this huge bar right here, I'll be interested in taking that short. For now, I'm just waiting. It did break that low today, but it looks like we closed. Where do we close? 213.39. and this low was 213.19. So we did close above this low of this bar. If we break and stay below that low of that bar, I'm interested in trading that down perhaps to this 190 region or even to the MA 200. So energy, though, traditional energy, oil energy is looking very good, and we will probably start looking for opportunities. There is that MA90 there in the way. So to be a little bit more conservative, we would wait for a bar that is completely above that MA50. And if we want to be just to the book, we would wait for two of those bars that are completely above that MA50. But for now, that is looking very good and very promising. So we may be, well, we will be for sure keeping an eye out for opportunities in energy. Financials looking like they're doing very well. We have a bunch of financial stocks reporting this week. We've got Taiwan Semiconductor and UNH Healthcare, so semiconductor healthcare. But other than that, we've got J&J, Netflix. Those are also going to be very big. But we have Bank of America, large financial stock, American Express, Morgan Stanley, Blackstone, Goldman Sachs, Schwab, Progressive, BlackRock. We have a lot of major players in the financial markets that are going to be reporting this week. And like I said, over the next couple of days, hundreds and hundreds, not couple of days, but although next couple of days as well, a couple hundred, but over the next 2 weeks, 5 or 6 or 700 stocks reporting their earnings, and we'll start to get an idea of the flavor of this earnings season. Remember that this is the first earnings season in a couple of years where we are actually have been revising the projections upwards. So that makes it a little bit more difficult for companies to beat earnings or to have a earnings surprise to the upside. So it'll be interesting to see if we still get a really strong showing in earnings. If we do, then that's great. That means the companies are doing excellent and the economy is in great shape. But I wouldn't be surprised if we don't, because we've been revising them down for so long and making it just easy for companies to beat earnings that we forget that that's actually a show of weakness in our economy, where if we have to revise down our earnings estimates in order to have our companies beat their earnings, well, that means they're not doing it. That's kind of like saying that the the volume that we've had in this market, it's really low, but we keep cheating and saying, hey, look, we're pulling down the moving average, and look, we're only 10 million below the moving average. We're only 5 million. Look, we hit the moving average the last Thursday and Friday. Well, yeah, because we pulled it down over 30 million. And so it made it easy for us to hit that average. And whereas these days on any other day this year would have been considered very low. So same thing with the earnings. We have that slew of earnings. We want to see still significant numbers, at least 70-80% of companies beating their earnings if we want this to be a strong earnings season and to have that help us propel ourselves upwards. If we get anything less than 70%, that's not going to be very good. We are probably going to get that pullback that we've been talking about if less than 70% of companies can beat their earnings. 70% of companies in the S&P 500. So if we don't get at least 350 companies reporting earnings beats this time around, we're probably going to be looking at that pullback. So we'll want to watch those very carefully, not necessarily specific companies, but the ones that we're going to be particularly interested in are those FANG stocks or those large mega cap stocks because they have a lot of clout on the S&P 500. So, for example, we have Google coming up. Google was one of them. Google? No? Next week? Google? Yeah, next week, Google. If next week Google and Tesla cannot beat their earnings, then that's going to be a huge drag on the markets. We're going to see that QQQ pull back even further and probably break that EMA 20. and that's going to put a lot of pressure on that S&P 500. So we'll watch all of that very carefully. I didn't look at the economic calendar this morning, which is pretty unusual, but we should look at it. So today is over. It looks like Powell spoke. Obviously, didn't really have much of an impact on the markets at 12:30 or whatever he said. The market didn't really like it, if anything, and we sold off and then recovered some. But let's take a look at the rest of this week. We got tomorrow retail sales. That'll be an important gauge to see how well we're doing in terms of consumer discretionary. Then we've got Wednesday, nothing huge, petroleum status report, but the energy is already looking very good, and we get this every week, so there really shouldn't be big surprises here. And nothing really on Thursday, nothing really on Friday. I'm pretty light in terms of economic news, really just the retail sales tomorrow, which we'll want to see pre-market. And then that is it for the rest of the week. So really, we're going to be looking towards earnings. So let's see what else we got in the sectors. Okay, biotech and industrials looking like they did pretty well. And the rest are just kind of random, nothing hugely significant. So what is interesting here is look at communications. That was one of the ones that we identified as stronger and might help lead the S&P 500 and QQQ higher. Didn't do so hot today. XLK was down, discretionary was down, SMH was down. So this is just not looking like a super strong market. We've got a mix between I and B. We've got fragmentation. XLP is down, so money is not moving into safety either. It's not moving into healthcare, at least not today. So it really looks like the major impetus is going to be interest rates, energies, and earnings. And the XLF is a reflection probably of earnings that are coming out this week because we're starting the earnings cycle with financials and then we start to get tech next week. So those three are the things that are driving the markets right now. And those are the things that we want to pay attention to. So right now, because earnings are always, unless you do a deep analysis sometimes, or you want to look at a lot of history, which during these pre and post market videos, I don't have enough time to do that. It takes a long time. It takes several hours to dig through every single company and their earnings history and all of this. So I generally don't take the time to do that research and just choose not to trade earnings. But I mean, sometimes earnings give really great reward to risk ratio type of trades. So I might do every earnings season. I do at least a few trades. I don't do a huge number of them. So we could look for some earnings opportunities. We could definitely start paying attention to IWM and XLE, pull back in that IWM that I showed you guys, and a continuation of breakout in XLE that I showed you guys. So other than that, we're sitting on a VIX hedge, which still looks like a very good idea. Even though the S&P is making or just flat at an all-time high, QQQ just kind of a mean reversion away from that all-time high and still looking very good and very strong. That VIX, that volatility hedge is there for just in case. So we are seeing heightened risk in these markets. We were already seeing it, and then we have an assassination attempt on a former president over the weekend. So that if that had been successful, or if he had been seriously injured, you would have seen this spike way, 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 way up. So now we have market uncertainty, we have economic uncertainty, we have interest rate uncertainty, and now we have geopolitical uncertainty within the United States. We had geopolitical uncertainty in Ukraine and then in the Middle East, and that did affect our markets for a few days. Now we're starting to get it in our own country, or at least the country that we are trading in. So that's going to have a magnified effect in terms of geopolitical events. So it's good to have that VIX hedge on still. So I'm going to keep that on and just make sure that I have balanced positions and stay neutral, even though this looks very strong. I'm still neutral. I just want high conviction trades to upside and downside just look like, and they don't always work out because we're technically in the RSP. we are in a chopping, well, except for the last couple of days, we're in a choppy environment. So even if I take a higher likelihood trade to the upside or downside, it's really difficult when you're fighting the underlying current of the market. The underlying current of the market, hey, let's not go anywhere. So it's going to be more difficult for those stocks to trend upwards or at least for significant periods of time. We have caught these trends upwards and then they peter out and then we were kind of flat or we're down a little bit. That's just a reflection of this. It just means that if we are going to make money, we've got to pick our stocks even better than what we have been and then get some outside moves to the upside or downside in this environment. It's going to be more difficult, but you got to keep trying. Right? You miss 100% of the times you don't try. So we still have to keep trying. We can't just sit on cash for months and months until the elections are over. We want to put that capital to work and we want to take our shots because as long as we maintain a high reward to risk ratio, it doesn't matter if we lose a few of them. We'll end up still making a significant amount of money. So that's the strategy that we're adopting. We're going to take some more shots here now that we have a clearer picture of what's happening. Of course, there's still uncertainty in terms of the interest rate and the geopolitical stuff and everything that I mentioned earlier, but we're still going to exercise our stock picking skills and just look for those weakest stocks and strongest stocks. So that's it for today. I hope you have a wonderful rest of your day, and I will see you tomorrow morning.